Shares of the world's largest corporate holder of Bitcoin lower this morning. MicroStrategy is now known as simply a strategy, reported its best quarterly profit ever, well above the loss that analysts were expecting, reversing the year-ago loss. The company now holds more than 600,000 Bitcoins. Joining us now, Michael Saylor, the company's executive chairman. 3% of all the Bitcoins that will ever be minted, 628,791. Owned by Strategy, but who's counting?
Yeah, thanks for noticing. We see Bitcoin as digital capital. The business model of the company is to accumulate the digital capital and then issue digital credit, like preferred stocks, against that digital capital in order to strip the volatility and the risk off of the Bitcoin and provide yield to investors.
And the latest preferred stock offering, it was going to be $500 million, and why not do $2.5 billion? So 5 times as much because of demand?
You know, my first IPO was $48 million in 1998. This year we did 4 IPOs for a total of about, the first was $500 million, $500 million, $1 billion, and this is the largest IPO of the year, $2.5 billion.
Like the tie, do you have, are they all orange now? Mostly?
We only wear orange ties.
You only wear orange ties? Because I went to D.C. and didn't think about it and wore an orange tie. Every single person thought I was like advertising Bitcoin, and on, you know, I had a picture that I put out, and on Twitter I'm supposedly a holder, and it's dangerous to do that unless you're Michael Saylor. I'll just say that.
The future is orange, Joe.
Unless it's Halloween, my wife's birthday. So these numbers were staggering me. It's very arcane, very hard to understand. Are you basically just a leveraged acquirer of Bitcoin, and that's what your company is?
Here's the way to think of it. Bitcoin is a digital commodity. It's about 50 volatility, 50 ARR, and you want to hold it forever, a 50-year duration asset.
Okay.
If you want amplified Bitcoin, MSTR, the equity, is amplified Bitcoin. People want 2x Bitcoin exposure. The options jockeys love this. The derivatives traders love this. If you want structured Bitcoin, that's Strike, STRK. We give you like the 80% of the upside, and we give you 20% in a structured dividend, and then we give you principal protection. That's for people that would prefer to invest in hedge funds or S&P indexes.
But you're using the proceeds to buy more Bitcoin. You just keep adding on to how much Bitcoin you have. And your average price is what, 73,000?
Yeah, we'll sell a credit instrument like Strike, and we'll buy Bitcoin. So we're taking the volatility and the duration and the upside for our equity investors, and we're giving a structured instrument to the credit investors. Now, Stretch, which is our latest IPO, and I think the most exciting product, it's like Treasury Bitcoin. It's for someone that wants monthly dividend, they want principal protection, they want the lowest volatility, they want a high yield savings account, and it kind of competes with money markets or with treasuries. And so what the company has done is we're taking this pure digital capital asset that's got a lot of performance but a lot of volatility, and we're refining it into securities that conventional investors can buy depending upon their risk tolerance and their duration interest.
Is there ever too much Bitcoin for you to own? Like if you could own all of it, would you?
I don't think we'll get all of it. I don't think in the range of 3 to 5 or 3 to 7% is too much. BlackRock has got more than us.
I just wonder. I was thinking about the mental exercise of if you could actually own all of it, like if you would even, bless you, if you would want it.
Well, you know, we started and we had very little, and Bitcoin was 10,000, and now Bitcoin's more than 100,000, and 97% of the Bitcoin is worth 10 times as much, and somebody else, not us, has it. Right. So as a practical matter, what we're doing is we're monetizing and powering up this.
I totally get it. I just mean, if you owned all of it, would that change the entire behavior of Bitcoin?
Yeah, we wouldn't want to own all of it. We want everybody else to have their piece. The nice thing there is there's 160 companies that are capitalizing on Bitcoin in the public market, up from about 60 last year. So the Bitcoin treasury movement's exploding. And companies like Metaplanet in Japan, and Capital B in France, and Smarter Web in the UK, and then there's a raft of them in the US, Anthony Pompliano's company, you know, and 21, they're all capitalizing. The big idea is I take digital capital, I issue digital credit. And a digital credit instrument can either be longer duration or it can be higher performance. We're offering 9% dividend yield with Stretch. The average money market's 4.2% dividend yield. No one would ever want to give a 9% perpetual yield in a bond that's backed by real estate or backed by gold or backed by any conventional fiat asset. But we're investing in Bitcoin, and my 20-year forecast for Bitcoin is 30% a year ARR. So it's easy for us.
Sort of a philosophical question about treasuries, actually. And I don't know how much you believe in U.S. dollars these days. But the question is, if you believe that corporations, if you believe one day Warren Buffett, instead of holding
maybe not Warren Buffett.
What?
Maybe not Warren.
Well, instead of holding $300 billion of treasuries,
calls it rat poison.
He would hold
$60 billion.
It's not going to be Warren Buffett.
He would hold, that all these companies, instead of holding cash or treasuries, they would all hold their money in Bitcoin. If that were true, what would that do to the U.S. government and its ability to operate?
Well, I think the key to keep in mind is Bitcoin is demonetizing foreign real estate, private equity, public equity, other sorts of store of value assets everywhere in the world. 20th century physical analog assets are becoming 21st century digital assets. These companies like Apple and Microsoft, if they could buy the S&P index, they'd be better off. It's against SEC rules.
Right.
If they could buy each other's securities, if the Mag 7 could buy each other's securities, they would be better off. That's against SEC rules. The only security Apple can buy is Apple stock. And what do? They buy their own security. So, and generally, if you're trying to create shareholder value, you don't want to park it in a fiat currency. You want to park it in a tangible asset. But gold and real estate don't make sense.
Did you ever see, we're talking
Bitcoin
about stable coins and treasuries having to back those. Could you ever see a day where they'd be backed by Bitcoin?
That's unclear to me. I think that the two dynamic trends in the crypto economy right now are the explosion of digital currency, which is what a stable coin is, backed by the currency equivalent, and the explosion of digital capital, which is what Bitcoin is, and Bitcoin is backed by energy. Computer power. And I think the currency is short-term medium exchange. Like if you need money for less than 4 years, people are going to the currency. And Bitcoin is long-term store of value, 4 years to 40 years out. And so it's a matter of duration there.
The word stable and Bitcoin don't really go together that well. But when you say stable coin and you're talking about a fiat currency, that does not compute either. There's nothing stable about having something that goes down every decade. It's worth what? How much less every decade? It's that you're just sitting on a wasting.
Monetary theorists want to say that money's a medium exchange and a store of value.
Neither one of them are stable. So Michael, so how much your Bitcoin on your balance sheet is worth? What, 75 billion?
On a good day, 72 billion.
72
today.
And what strategy market cap?
About 120 billion.
So you can issue stock because it is such a premium to what the Bitcoin you're holding. You can issue equity to buy more Bitcoin. It almost seems like it's too good to be true. Almost. But you need things to hold up. You wouldn't want it to sell at a discount to the Bitcoin you hold.
Yeah, we announced in our earnings call last night that we don't intend to issue any equity at an MNAV of less than 2.5.
Even okay. And you consider preferred equity too, right?
Right. What we can do is we can issue equity at a premium to Bitcoin, and we can also issue credit instruments. So all of those are accretive. They all generate yield. What we announced last night is that our target MNAV is 4, and that means 4 times our underlying Bitcoin. And above that, we'll be very active. From 2.5 to 4, we may be opportunistically active. But below MNAV of 2.5, we're only going to use equity to pay dividends.
So, again, it seems like there's quite a bit of leverage in possible horrific events if there is a terrible downside pullback. In the past, when we've seen the move from, take your pick, what we go, 75 back to 17, I think, not too long, or 65 back to 17. Are there nights where you're pacing and not sleeping and wondering about?
We lived through the $66,000 to $16,000 drawdown, so we have a PhD in leverage. There's 3 types of leverage. There's short duration margin leverage, where you mark.
You had some, didn't you?
We had a Silvergate loan. The bank failed. And so you don't want short-term margin leverage.
Yeah.
The second type of leverage is long or mid-duration bond leverage. That's better, but it's not great. We had some of that, and we decided to remove that. And we've got some convertible bonds now. There's sort of that. The best leverage we've discovered is equity leverage. So issue preferred equity that never comes due, right? The principal never comes due.
Exactly.
And we've done $6 billion plus of that financing this year. That's Strike, Stride, Strife, and Stretch. So what I think is that if you're using preferred equity, you can lever up 30, 40, 50% because the principal never comes due. If you're using bonds, you want to be 20 to 30% because that way you can take an 80% drawdown. If you are in margin leverage, you just don't want to go there at all. And that's normally what the retail does.
Is the person on the other side of that trade in a bad situation? I mean, if this is a perfect trade for you, is the person on the other side who's got the preferred, who can never make it come due, are they in an equally good position?
The people on the other side of the trade would be Bitcoin investors that are getting principal protection, a guaranteed dividend, and the upside of Bitcoin. So they
get the guaranteed dividend even if Bitcoin comes down below your strike price, below 76,000? Strike
is like 6 times over collateralized. So if you look at these preferreds, the weakest one is 5x over collateralized Stride. So they've got $5 of Bitcoin collateral for every $1 of principal at risk. So what we're doing is we're providing people seniority in the capital structure. If what you want is Bitcoin upside, but you want principal protection, you go for Strike. If what you want is a high-yield savings account that pays 9% instead of 4%, and you're willing to accept 7-8% Bitcoin over collateralization, 7 to 8x Bitcoin over collateralization, you would do Stretch.
Okay.
So Halloween, you still go with the orange, basically.
Well, now I've got a matching outfit. I know what to go with.
You do.
Orange.
If we were to have a party, would you wear orange to our party?
Maybe. I'll wear some amount of orange.
Like it. I like it. Thank you, Michael Saylor.
Nice to see you, sir.
I understood more this time. How about you? You understand?
A little more.
80%?
You know, I'm slow, so I got to listen again. I'm gonna have to replay it for myself.
Replay it at home.
Got to ask ChatGPT.
Exactly.
Do some translation.
It's great when you're on set.
Thanks. It's great to see you.
Thanks for having me.